I'm already a millionaire in my mind. I may not see it yet, but I believe it now. In the same way a seed is called by its finished form, I'm accepting my divine inheritance as a child of God. I'm meant to have life and have it more abundantly. My treasure on earth shall correspond directly to the treasure in the heaven of my mind. Abundance is my birthright. Ashe, amen, and so it is. My name is Jullien Gordon, and I'm author of Rich and Righteous: Spiritual Secrets to Mastering Money, Manifestation, and Your Mind. After becoming a multimillionaire through real estate investing, I was moved by God at the beginning of the pandemic to share my money mindset that allowed me to quit my job in January of 2009 at the bottom of the last recession and achieve full financial freedom. I own my mental real estate before I own any physical real estate. This book is like some of your favorites: Rich Dad, Poor Dad, As a Man Thinketh, Think and Grow Rich, and the Bible all in one. But the divine downloads and thoughts that are in here are 100% original and came to me over a 6-month period at the beginning of the pandemic. This book is normally $100 on Amazon if you went there right now, but I want to give you access to it for free by inviting you to our next reading group. Yes, the reading group is 100% free. Every weekday for 100 days straight, I'll be reading and discussing the 10 money commandments in the book that make money come to you in your life easily, more frequently, and abundantly. And it will take about 30 to 45 minutes as we read 3 to 5 pages per day until we finish the book and reprogram your mind around money. Why 100 days? Well, if you are 30 years old, you've lived for 10,950 days. And we have to deprogram and reprogram the negative, scarcity-based money mindset society has taught you. And I believe I can do that in just 1% of the time in about 100 days. I'm done with shelf help. You know, when you buy a book to change your life, but you never read it, it just sits on your bookshelf and collects a whole bunch of dust. We off that. When is the last time you had an author actually read their book to you out loud because they cared about you getting the information in your soul? I'm not just here to get this book in your hands. More importantly, I want to get it in your head and your heart, because that's where the real transformation occurs, in the conscious and the subconscious mind. As scripture says, be ye transformed by the renewing of your mind. This is not the type of book that you just read once. To renew the subconscious mind requires repetition over and over and over. So if you joined us last time, I encourage you to join us again. I myself have read this book over 10 times already. So click the link to join our next reading group, and when you sign up, I'm going to give you the first 2 chapters of the book for absolutely free on what is money and abundance is your birthright, so that you can start your journey to a more abundant life today. Rich Rising. Welcome to another day of Read Rich and Righteous. We're reading Rich and Righteous: Spiritual Secrets to Mastering Money, Manifestation, and Your Mind. Today we are actually on day 52. We are beginning week 11. I hope you had a great, strong end. I hope you were able to take Sabbath. I hope you were able to get some rest and be rejuvenated so that we can do this work with the highest level of energy possible. We are continuing our journey, and we literally only have about 4 weeks left. We have about 1 month left to get through the last, a little over 100 pages left in the book. And so just so excited, and I want to just extend gratitude for you trusting me and to guide you on this particular aspect of your journey, which is your relationship to money. Our relationship to money is going to exist for our entire lives, and so we want to have the healthiest relationship possible. And I just want to say thank you. I see people typing in their consistency scores. I see some 50 pluses out there, which is absolutely amazing, meaning that you've been here since the beginning. And if you missed a day live, you've been able to catch up by watching the replays before they expire on Sunday, or you bought the replay package, which then allows you to go catch up on your own time. And so just so grateful for you. I know that the people who are most consistent are going to have the greatest results and are already having the greatest results. And so just thank you for showing up for yourselves. All right. So also quick reminder, given that we are a month away from finishing, we are having Rich and Righteous graduation. You can go to rrgraduation.com to sign up for that. It's absolutely free. There's going to be an in-person event in Atlanta that's going to be limited to 150 people. And when I announced this last week, half the seats are already filled up. So you want to make sure that you go ahead and lock in your seat if you are going to be in Atlanta, Georgia on December 9th. Otherwise, Otherwise, you can participate via live stream. For those of you joining us for the first time, we welcome you. You can actually get the book at, you can join the challenge first and foremost, even if you are quote unquote late. You're never late. You're always on time. Divine timing is always on time. But if you want to join the challenge, you can go to richrightnow.com, richrightnow.com. On the thank you page, you can get the ebook or the physical copies of the book. They also, each package also comes with the replay so that you can catch up. So again, that's richrightnow.com, richrightnow.com if you want to join the challenge for absolutely free. And if you choose to buy the physical copy of the book or the ebook, that is available. And it comes with the replay so that you can catch up. All right. So let's get into it on this Monday. We are on page 276. We're on page 276. And the chapter today is how to acquire more assets. How to acquire more assets, in particular cash flowing assets that pay us on a daily, weekly, or monthly basis. So that's what we're focused on today. And let's get right into it. The scripture for the day is Deuteronomy 28:11. That's Deuteronomy 28:11. And it reads, "The Lord will make you abound in prosperity, in the offspring of your body, and in the offspring of your beast, and in the produce of your ground, in the land which the Lord swore to your fathers to give you." Okay. Again, the Lord will make you abound in prosperity, right? Meaning abundance, meaning wealth. In the offspring of your body, which is the physical, right? In the offspring of your beast, which is your lower nature, and in the produce of your ground. And we know that ground and soil and dirt represents the mind, right? Especially the subconscious mind. In the land which the Lord swore to your fathers to give to you. And so when we're talking about the promised land, we're talking about having dominion over our mind, not just a physical place in the Middle East that people are warring over. That's where the mistake has occurred. The true promised land is your Christ consciousness, your conscious mind at its highest level, having dominion over the subconscious mind, which has power. The subconscious mind runs 95% of your lives, right? Our lives are on what they call automaticity, meaning that 95% of our lives is programmed. But the beautiful thing about it is when you step into Christ consciousness, that 5%, even though it doesn't have the same power of the subconscious mind, it has power over the subconscious mind. It does not have the same power as the subconscious mind, but it has power over the subconscious mind. It has executive authority. In the same way, the United States president does not have power, more power than we as the people, right? The United States president does not have more power than us as the people, but it can make decisions and temporarily, in some cases, have power over the people with the decision making power. And that's what our Christ consciousness is supposed to be. It's supposed to be at the seat, at the right hand of the Father, right? Which is our right brain, our creative brain, which is at the right hand of the Father, right? So this is what we are exploring. And and again, you see the word offspring and produce, right? We have to be creating. That's what we as children of the Creator must do. We must create, and we must have offspring. And those offspring do not just have to be children. Okay, those offspring can be ideas. Remember, there's 4 ways to leave your legacy. There's baby bodies, which is actually the easiest one because that can happen in 5 minutes if you're not careful, right? There's your bodies of work. There's institutional bodies. And then, of course, the highest level is actually giving your body in service, like Christ, right, to your fellow brothers and sisters in service, all right? So that's a little word even before we get into the chapter. So let's get into it, all right? So page 276. According to Robert Kiyosaki, author of Rich Dad, Poor Dad, one of my favorite books, an asset has value, produces income or appreciates, and has a ready market. Assets put money in your pocket. So this is why when, especially as a multifamily real estate investor, I don't really consider single family homes assets, though they do appreciate, and they typically appreciate at around 3% per year. They actually don't put money in your pocket consistently. Right? In fact, they actually take more money out of your pocket at these interest rates than if you were renting the same square footage in many cases. And so you have to be very clear about the definition of an asset if that's what we're trying to accumulate and acquire. Asset alchemists, which is what we are, combine their capitals, which we discussed last week, which is your personal capital, intellectual capital, social capital, financial capital, human capital, and physical capital, to create and acquire more assets that create more capital on their own. This is where leadership occurs, where something is able to operate because you created a system, right? You may have initially had to use your body and your beast, right? Your hustle in order to get the momentum to get that thing going. But once you've done that, now it is operating on its own and actually creating and producing offspring, as the scripture Deuteronomy 28:11 discusses. All right. So through appreciation and or cash flow, this accumulation of assets creates wealth over time. The American dream teaches you to focus on two of the lowest yielding assets in the world, which are cash and single family homes. Okay. So that is the American dream. Save up enough money in your bank account for retirement, right? In your 401k, and get a single family home. When in reality, these are two of the lowest yielding assets in the world. Cash is in fact the lowest yielding asset in the world, only yielding 0.03% in your Bank of America savings account. And then when adjusted for inflation, you're actually losing money by saving money. But this is what we're taught to chase for our entire lives, right? For instance, at no point does a single family home put money in your pocket unless you do what? Sell it. If your home happens to appreciate, the appreciation only covers interest to the bank. When the mortgage is paid off after 30 years, it is replaced by maintenance. So, oh, my mortgage is paid off, Jullien. I don't have a housing payment. Yes, you do. It's called maintenance. You have a 30-year-old home now. Now the roof is caving in. Now the foundation is shifting. Right now you have to upgrade your electrical system and your HVAC system. So now your mortgage has been replaced by maintenance because now you have a 30-year-old home. So you got to be very mindful of how that asset actually operates. We are playing chess, not checkers, as Nipsey Hussle said. The game is more complex and requires strategy. Cash is not king. Cash is not king. I know you've heard that over and over. Cash is king. Cash is king. Cash is not king. Cash only yields 0.03% in a savings account and depreciates over time due to inflation, as I just said. Here's the truth and the reality, right? This is going to reorient your mind. Assets are queen, cash flow is king, and cash is pawn. Yes, cash is the lowest piece on the board. Okay? Again, assets are queen, cash flow is king, and cash is pawn. Okay? And so queens, what do? Queens give birth to who? They give birth to kings. So assets give birth to cash flow, right? And then pawns follow kings' lead. So out of cash flow come pawns. And in the game of chess, you will happily sacrifice a pawn, right, to acquire another queen. So what does that mean when it comes to money? You will happily sacrifice money, your pawn, in order to acquire another queen that then produces cash flow, which then gives you more pawns, right? And so this is the true name of the game. And if from an early age we were taught about assets and taught that assets, especially cash flowing assets, was the key to freedom, we would have focused on that than simply acquiring or going after the highest paying job, which would only give us cash, right? Now, we can use our job right now to finance our freedom, but we have to know what the true end game is. The true end game is not the highest paying job. The true end game is having an accumulation of assets. All right. So the visual is here. Queens equal assets. Kings equal cash flow. Pawns equal cash. Queens give birth to kings. Kings lead to pawns. And then you sacrifice those pawns in order to acquire more queens. All right. Everybody type, I want a queendom. I know everybody talks about the kingdom of heaven and this and that. I want a queendom. Right? I want a queendom because the queen is where the power is in the game of chess. All right? All right. Do not start any gender wars in the chat, please. It's not about that. It's just a metaphor. Okay? There are several types of assets to acquire to build wealth. Passive assets that appreciate over time, like stocks. Right? Once you buy the right stock at the right price, typically based on history, those stocks passively increase without you having to do anything. Passive cash flowing assets like dividend paying stocks, REITs, or loans. Semi-passive assets that generate cash flow like a vending machine. Semi-passive assets that appreciate and generate cash flow like multifamily real estate, which is my favorite asset class. 5, active cash flowing assets like an owner operated business, which also appreciates in value as the cash flow increases, right? So those are typically the 5 types of assets you can acquire. Now, assets can shift categories based on your level of daily engagement. Assets can shift categories based on your level of daily engagement. Passive means that you set it and forget it. And there aren't actually that many passive income streams there. You actually have to be attentive in many cases. There are some, like stocks, putting money into the S&P 500, which is typically grown at about 4.77% annually, right? Which is greater than your savings account, but there's also volatility there, right? So, again, passive means that you set it and forget it, and there aren't as many truly passive investments out there as people make it sound. Semi-passive means that you have to pay some attention to it, and active means that you are fully engaged and in control of the growth of that asset, okay? So appreciation is based on the larger market's supply and demand. So our control is when we choose to buy and when we sell. That is the only control we have when we're looking for appreciation, when we buy and when we sell. The type of assets that tend to give you the most control and potential for wealth generation is an active cash flowing asset. Over time, you can put people and processes in place for it to become passive. But initially, it will likely be led by who? By you. Okay. And as you build it and the cash flow becomes more predictable, it also appreciates in value because someone may be willing to buy that income stream at a certain multiple. And we talked about that in previous weeks, how you can have a business that is producing $100,000 in profit every single year, but that business is not worth $100,000. In that industry, the multiple may be 3 times profit, which would make that a $300,000 business if you sold it today, or it could be 2 times revenue. So the revenues might be $300,000, even though the profit is only $100,000, and that business is actually worth $600,000 based on how companies are bought in that market. So that's really the power of having a business that operates without you. Right now, you can be in the business now, but could you sell that business, or is your personality tied to it, or is its success tied to you? Because the system, the SOPs, right, our standard operating procedures are not outlined, and you can't be replaced in that business. Okay, now you are irreplaceable because you are a unique being, but ultimately, if we really want to create assets, you have the ability to create something, sell it, move on, create something, hold it. It's up to you. All right, it's all your choice. Okay, so moving forward, we're in the middle of page 278. Active cash flowing assets include products, processes, people, patents, and properties. Okay, products, processes, people, patents, and properties that create money with a certain level of predictability, right? Like I have an online course and I know that it's going to produce $2,000 per month, because I sell 10 a month at $200 on average, right? So that's predictability when you see that pattern over time. For instance, a multifamily home produces rental income with a degree of certainty each month, correct? And of course, I account for vacancy rate, people moving and transitioning, etc. But I can predict the income from my multiple units pretty predictably, right? A Shopify, Etsy, or eBay store may have products that yield a certain amount of sales each day with a certain degree of effort or advertising. Or the team and the processes you built may deliver a service that generates a predictable amount of sales and cash flow for you as the investor or entrepreneur every year. So just think about this. You could have a business where you're in it, it produces $10,000 per month. But if you actually entrust other people with it, but you don't have to be there present, it actually produces $6,000 a month without you actually being there. And there's some of you who will say, Jullien, I'm going to be there and I want to turn that $10,000 to $20,000 a month, right? Or there's some of you say, that business I wasn't really passionate about. I had the skill set to get it started, and I'm just going to allow that to kick off $6,000 a month without me having to touch it. Right. So again, these are choices based on where you want to commit your time and energy. And if that $6,000 a month frees you up to do something that is more in alignment with your God-given purpose, then that is probably the best path to take. OK. Again, we're always true wealth is being connected, tapping into the source that never taps out. Right. Tapped into a source that never taps out, and being in alignment with our Creator, knowing that all these things shall be added unto us. Bottom paragraph 278. There are 6 ways to acquire more assets. Be it, buy it, build it, bust your butt for it, borrow it, or barter for it. An honest assessment of your 6 forms of capital will help you determine which method is best for you to begin with. So that's why we started with the 6 forms of capital, because based on the amount and type of capital that you have will determine if you should be it, buy it, build it, bust your butt for it, borrow it, or barter for it. For example, if you don't have much financial capital, right, but you have the skill set and you have the time, effort, and energy that you can put into it to be it, then you might want to borrow. This happens in multifamily real estate all the time. I don't have the money to buy the property in cash, right? But I've learned from Jullien through the multifamily master plan how to do it. So I'm actually going to go borrow this money from the bank, whether it's 100% financing or 96.5% financing with FHA, and I'm going to acquire this asset in that way. So again, it depends on your 6 forms of capitals, which determine the strategy that you ultimately use. Is this making sense? So you're starting to see how all of these things are starting to tie together now, and that there was a sequence to this book, right? If you have cash on hand, you may buy assets. If you don't have cash on hand, you may have to borrow or barter. Is this making sense? All right. If you have credit, you may borrow assets. If you have time and talent, you may build it or be it. All right. So again, this is determined by your 6 forms of capital. Now, moving forward to page 279, you'll see the full graphic and chart here. Be it, buy it, build it, bust your butt for it, borrow it, and barter for it. And you'll see examples, quotes, the pros and cons of each particular strategy. And we're going to walk through those right now. So we're on page 279. Be it. Number 1, be it. Being the asset means developing a personal brand that in and of itself is valuable. Oprah Winfrey is one of the best examples of personal branding. The Oprah Winfrey Show was named after her. O Magazine is named after her company, she's also featured on every cover. Her TV network is called OWN, which stands for Oprah Winfrey Network. And her production company, Harpo, is her first name spelled backwards. Did you know that? It will be interesting, to see what happens to her companies when she transitions, since they are so centered around her as the brand. Nonetheless, a personal brand can be leveraged into real assets. Kim Kardashian, Logan Paul, and Ryan Kaji, a young YouTuber who reviews toys, are some other examples of people who have leveraged their personal brands into assets beyond themselves. Attention and audience are assets. Okay. So those are just some examples of people who have taken their personal brand, been able to attract wealth due to it, and then have converted those into other real assets that don't rely on them. Okay. Number 2, buy it. The next way is buying assets. Since money is the most liquid form of capital, you can use it to acquire assets that other people built that will produce cash flow and or appreciate. You don't have to know how to build a house. You can buy a house if you have significant financial capital, right? Or you understand the game and understand how you can actually get access to credit, because while you may not be able, you personally may not be credit worthy. When you are buying real estate, they're not just looking at you. They know that they are supported and collateralized by the actual asset themselves, right? By the home, right? They have first lien position on that property when they loan you money. So that's where the collateral is. So the bank might not give you $100,000, $200,000, $400,000 for your 10-page business plan, but they will give it to you for a multifamily real estate investment or even a single family home, because they can sell that if you fail to make the payments, right? So this is buying it. So some of those investments may be purely passive, while others are active, meaning that you will be engaged in making the asset perform better. As counterintuitive as this may seem, you are buying income. Everybody type I buy income. I buy income. I know you've been used to working for income, but there are, as in plural, there are ways to buy income. Every time I buy a multifamily home, I am buying income. But Jullien, aren't you using your income to buy income? Yes, I'm using my pawns, which is my cash, and I'm sacrificing them to acquire an asset that will pay me beyond my body. Because even if I sit still and do nothing that month, that cash flow or that check is coming in, right? And so we have the ability to buy income. I know that just if you think about it, it sounds crazy. I'm buying income. I'm so used to working for income. But yes, you ultimately can buy income, right? You are using your active income to buy passive income. That's what it means to buy income. This is how you break free from the time for money trap. Buying assets is one of the quickest ways to give cash consciousness. The goal is to find undervalued or underutilized assets, acquire them at a discount, and increase their performance. Okay, so you can buy a multifamily property and you realize that the rents were low. You go in, you take over. You don't just hike them up to try to displace people. We don't believe in that. We call that colonization, not gentrification. We call that colonization when you try to displace the original natives of that particular community. Or you go into a business, let's say it's a laundromat that's underperforming. You apply your marketing skill sets, branding, better machines, etc. And now that business goes from producing $5,000 a month to now producing $10,000 a month. So you took an underutilized or undervalued asset and you made it perform better, which then increases its ultimate value. Okay. Number 3 is build it, right? As a creator, you have the opportunity to build things. Remember, God gives us the power and the ability to create wealth. God gave Noah wood, and then Noah had to go build the ark, right? God gave Jesus fish, 2 fish, and he had to multiply those fish, right? So when we think about it, we have everything that we need to succeed. So build it. You also have the option to build an asset yourself. Examples include building a company from scratch or a loyal audience on a YouTube channel, perhaps. Your company or the audience may not pay you in the short term. Okay, the process of building something, the unsexy work of creating a foundation, usually you don't get paid in that stage. But ultimately, as you've been consistent and you get something closer and closer to its finished form, then all of a sudden it becomes valuable. Okay, so your company or audience may not pay you in the short term, but you believe that you will reap what you sow in terms of income and appreciation over time. When a company's income increases and becomes more predictable, in addition to yielding cash today, it also appreciates because an investor who wants to buy income, right, or believes that they can grow the income and value may buy the company at a multiple of 5 times the current income or revenues. So your increase in income also means an increase in equity if the asset is based on systems and not just your personal brand. So when you build something, make sure that you are implementing systems and processes and SOPs, which are known as standard operating procedures, so that that business can operate without you and it's not solely dependent on you, because then there's an extra layer of value that gets added to that business if it's not just based on you. Okay. Number 4, bust your butt for it. Okay. We already know that you're going to bust your ass until you get your assets to be working harder for you than you work for them. Okay. You're going to bust your ass until you get your assets to work harder for you than you work for them. All right. But it's okay. We can put in what we call sweat equity. Sweat equity, right? We're going to use our effort and energy to build momentum into something greater. This means selling your most valuable asset, which is your time and talent, for money. This includes employees, the self-employed entrepreneurs, and owner-operated entrepreneurs. This is the easiest place for many people to start. Even though time is your most valuable asset, at the same time, it costs you nothing because it is freely given to you by God. So time is our most valuable asset, but again, it costs us nothing because it is God who gives us that time and that energy. And where's the greatest currency in the world, family? The greatest currency in the world is the energy that is flowing through your body. You're the breath that is flowing through your body. That is the greatest currency in the world. You take those 2 things away and guess what? You have nothing. All right. So the problem with being an employee is that your ass, the problem with being an employee is that your ass, I'm going to put it, your ass is building someone else's assets. The problem with being an employee, I'm going to have to highlight that. The problem with being an employee is that your ass is building someone else's assets. So you spend 40 years building an asset for someone else that, yes, you get paid a little bit from. You probably get paid breadcrumbs in comparison to what you actually built over time. Imagine that you just built something that you wanted to see in the world for 40 years, how valuable that thing would be. It would be more valuable than what anybody could have paid you over the course of 40 years, right? So again, you have to think in the long-term a long term. And a lot of people say that they can't wait that long, but they'll wait 40 years on the corporate plantation. They can't wait to build something. And I know you need money to live along the way. And during the initial building phases of something, there may not be a lot of income, right, as you're just getting started. But which would you rather have, right? If you keep your cost of living low, you can take your time to build something that then goes like this, right, in terms of its value, as opposed to you being on the corporate plantation and earning up here, earning more than this person, this creator initially, right? But your financial trajectory being here, being capped, being limited. We want to take off the salary cap. This person looked like they were losing, but as they got closer and closer to finished form, they hockey stick like that. That's typically how it happens, okay? So the problem with being an employee is that your ass is building someone else's assets. Even if you bust your butt, it doesn't guarantee higher pay. This is why salary can be slavery. Because you could find $1 million idea for that business that year, but you're not going to get paid $1 million for it. You're going to get paid the exact same salary with maybe a little bonus and a little pat on the back and a little award at the awards dinner. Okay? You may get a bonus or a raise or a promotion, but those decisions are also in someone else's hands. A job is a source of income, but it is not an asset. A job is a source of income, but it is not an asset, okay? You can't hand down your job to your children. 40 hours per week times 50 weeks per year times 40 years is 80,000 hours. If you just pause for a moment and said, my career is likely going to be around 80,000 hours, what could I build with my life force energy over the course of 80,000 hours? That is 80,000 hours put into building assets for other people in exchange for money, which is the lowest yielding asset in the world. Though self-employed is usually the next phase, it is not the final destination. Most self-employed people have simply created a job for themselves rather than a sustainable company. If something were to happen to them, their company would die the next day. Taking your financial potential into your own hands is powerful, but to get from self-employed to entrepreneur, okay? See, a lot of people, they quit their job and they say, I'm an entrepreneur. No, there's typically a stage in between entrepreneurship and employee called self-employed, where everything is dependent on you, okay? So I really make a distinction between somebody who's an entrepreneur and someone who is self-employed. They're on the path to entrepreneurship, but they're not quite there yet. And so that distinction is really important. Taking your financial potential into your own hands is powerful, but to get from self-employed to entrepreneur, you have to go from self-reliance to systems. You have to go from self-reliance to systems. You must generate enough profit to pay people and create processes to hire those people to execute. An entrepreneur still works hard, but it looks different. Instead of working in the business, they work on the business. Okay, so that is the distinction between self-employed and entrepreneur. An entrepreneur works on the business. They have a bird's eye view of the business, and they're refining systems, right, and processes, and the people that they bring into that business, and being a leader. Whereas self-employed, they're in there hustling, right? They're actually in the business. They're in the trenches, and it's okay. But just know that that is a stage, is not the final destination. Okay, so everybody understands the difference between self-employed and entrepreneur. It's a key distinction. Because just because you're self-employed doesn't really make you an entrepreneur if we go based on that definition, okay? Number 5, borrow it. You can borrow someone else's assets to build yours. This is a viable option for people with credit. So you may not have the cash to buy a multifamily outright, but you have credit. And because you have credit, you can actually get access to cash. A licensing agreement is an example of borrowing an asset that someone else created to create profit for yourself. In real estate, when someone acquires property using a mortgage, they are borrowing the asset. In this case, it is the bank's money, which is actually really your money, right? They agree to make monthly payments in exchange for full control over the property. Multifamily investors get to benefit from the cash flow, the appreciation, the principal pay down, and the tax savings, while also living for free in the asset if it is owner occupied. Okay, so that is an agreement that I make with the bank. Because the bank is not a real estate investor, right? They're not a real estate investor. If they were, they could actually take your savings account. They could go invest it for themselves, right? But they're not. So they're willing to borrow it, lend it to you for anywhere from 6 to 8% at this time, right? But if you know how to make that money work at 12 to 15%, you get to keep that margin in addition to the other benefits of having full control of this property, which is the appreciation, the principal pay down, the cash flow from the rents, and the tax savings, right? Plus also living there for free when it comes to multifamily, not single family. Okay. This is why it's my favorite asset class, because there's so many benefits to this particular asset class. And I will borrow as much money as I possibly can deploy to execute and acquire more and more multifamily real estate. Okay. There are not too many other assets that you can also live in. Okay. That's another key factor. When it comes to multifamily real estate, there's not too many other assets that you can live in. And we know that our housing expense is going to be the greatest expense in our life. Though the money is borrowed, it is called good debt, right? Because good debt that pays for itself. We know there's good debt and there's bad debt. Bad debt is debt that you have to pay back, okay? So bad debt is credit cards, student loans, and a single family mortgage. You have to pay those back yourself. Whereas good debt is debt that actually pays you. The investor is converting the initial liability into a cash flowing asset, and the financial benefits outweigh the cost of borrowing, right? If you have no money at the moment, you can borrow someone's weed whacker or lawnmower and start a lawn care business right now. You can borrow a white label product and brand it. As a franchise, you can even borrow an entire brand and business model. There's nothing wrong with borrowing to build assets, only borrowing liabilities. Okay, so there's nothing wrong with borrowing. You know, the Bible says, "I'll be the lender, not the borrower." I'll be the lender and not the borrower. That is in reference to actual money, right? But again, I said there's good debts and there's bad debts, right? That in most cases, people have bad debt, right? Because they don't understand that there's such thing as good debt, right? But you can also borrow other things that then you can use because you know how to use that thing in a greater way than that individual or institution knows how to use it. Okay. Then number 6, barter for it. Barter for it. Okay. Finally, the most overlooked way to acquire an asset is bartering. And if you remember in our early chapters, we talked about how money got created, and it started out with the barter system. Bartering is powerful because there is no revenue to tax. There's no revenue to tax when you borrow or barter with someone, right? If we could organize ourselves as a community and we literally just bartered, right? Then guess what? The IRS wouldn't get any revenue, any taxes from us because we're just exchanging our time and services as opposed to exchanging money. But if you collect money from me, right, instead of bartering, then guess what? You're going to get taxed on this money that you collected and vice versa. So this is a very powerful thing. The tax of bartering is the time, here's the tax of bartering. Okay. The tax of bartering, because we're not organized, is the time it takes to find someone who needs exactly what you have that also has exactly what you need. So I need, we used the example of the apples and the cow, right? I need beef right now and you need apples right now. Finding that connection is very, very hard. And that time tax is what makes bartering so hard. Sports teams barter with their players under contract all the time. They trade because they believe a player or package of players will be more valuable to their financial future than the ones they are giving up, right? So you don't think athletes are slaves in some way? They may make a lot of money, right? But they get bartered. A team can say, look, you're going over to Cincinnati tomorrow. What? I my family's here. My kids are in school, this and that. Good luck. See you. You're being shipped off to Cincinnati. Don't even suit up for this game. Right? So when you don't have any control over your future and your destiny, right? That's even as high as you might be paid, that's slavery, right? But listen, the companies, the owners of those contracts, right? They are bartering. They're trading players, right? And packages of players. You may barter something you have or can do to get something you need to do what you want to do. Who do you know that has something you need that would value a relationship you have, the use of some equipment you have, or a skill you have? I'm going to repeat that. Who do you know that has something you need that would value a relationship you have, the use of some equipment you have, or a skill you have? Your capitals can be exchanged for more than just money, right? Remember, we said financial capital is the intersection of your social and your intellectual capital. Your social capital is who knows you, who you know, and who knows you. Your intellectual capital is what you know. So financial capital is who knows that you know what you know. And so because some of you are shy and afraid to put yourself out there and afraid to stand in your brilliance, right, in your wisdom, there's a lot of people who don't know that you know what you know. And as a result, you are cutting off financial opportunities from coming into your life, right? Last paragraph. The problem is never money. Everybody type that. The problem is never money. The problem is never money. The problem is never money. It is always mindset and creativity. If you don't have enough money right now to do what you want to do and have the life that you want to have, there's two issues. It's your mindset and your creativity. And do you have creativity? Yes, you do, right? Because you are a child of the Creator. And so we have to tap into the right brain. That's where our creativity is. Not the logical brain, which only sees based on the five senses, but the right brain, which sees based on our imagination, what is actually possible. What the right brain can see what is unseen, right? And we know that when Jesus, there's a parable where there were fishermen out of the water and they were having difficulty catching fish. And what did Jesus say? He said, cast your net to the left side or the right side. You cast your net to the right side. What does that mean? That means casting your neural network to the right side. Cast your net or your neural network to the right side. And when they pulled it up, they couldn't even pull it up because there were so many fish there, because that's where all the abundance lies. The logical brain operates based on worst case scenario. That's your lizard brain, your survival brain, right? Worst case scenario, I need to protect myself, ego, etc. Right side is infinite possibility, right? And so the problem is never money. It is always mindset and creativity. The only two that really require money up front of the 6 ways that we just discussed is buying it or building it. So if you go back to the chart, the only 2 that really require money to acquire more assets is buying it and building it. But being it, busting your butt for it, borrowing it, and bartering actually don't require you to have the money to do something that you want to do. Right? So money is not the limitation. Look at your life with an abundance mindset and assess what assets you already have. That's why we went through the 6 forms of capital. What is your personal, intellectual, social, financial, human, and physical capital? From there, decide what kind of assets you want to have. And then ask yourself, how can I use what I already have to get what I want to have? How can I use what I already have to get what I want to have? That will help you determine which of the 6 ways above will be the best route for you to acquire the next asset you want to manifest. All right. So that concludes the chapter. All right. Money is not the limitation, family. It is our mindset and our creativity. And we have to tap into that. The only 2 of the 6 require you to have money, and that is buying it or building it. But the other ways actually don't require money. So the limitation is really your mindset, right, and your creativity in order to turn nothing, right, an idea into something. So don't feel limited because, Jullien, I need $100,000 to do this. No, you don't. No, you don't. You need to use one of the other 4 pathways to get started. And as you build momentum, guess what? Energy, money will start to attract unto you, whether that comes in the form of customers, whether that comes in the form of investors, whether it comes in the form of grants. But you have to start building momentum with the energy and the currency that is in your body first. All right. So that concludes today's chapter. Tomorrow we'll continue the journey, and we are going to be reading Is It Expensive or Expansive? This is one of the most powerful decision-making tools when you are ever about to pull out any cash or your credit card. You want to ask this simple question to help you build more wealth. It is going to clarify many of the purchases that you make on a daily basis. So I'm excited to share that with you. I just want to say thank you for being here. In chat, go ahead and type your greatest takeaways from today. Go ahead and type your greatest takeaways from today. Again, you can get the books. If you've missed any of the sessions, you can go to richrightnow.com, and on the thank you page, if you buy the digital package, you'll get access to all of the replays. We have Rich and Righteous graduation coming up on December 9th, and so you can go to rrgraduation.com, rrgraduation.com. There will be an in-person for about 150 people in Atlanta, and then the rest of you, it will be live streamed. We will be reading the final chapters there. We will be doing testimonials or testimonies, as we call them here. There'll be networking. I'll be doing a book signing, and it's just an opportunity to build community. We've been connected on YouTube, online, and in chat, but this is your opportunity to meet your other brothers and sisters who are thinking on the same exact wavelength, who are thinking on the same exact wavelength in terms of wealth consciousness and being rich and righteous. We are a family. We are a community. We are a long-term vision, and we are starting that vision and building our momentum right here, right now through Read Rich and Righteous. All right. So yes, in chat, I see the distinction between self-employed and entrepreneur, working on your business versus in your business. Good. Good debt versus bad debt. The six ways to buy more assets. Money is not my limitation. It is my mindset and my creativity. Good. Yes. Only 2 of the ways require me to have money to create what I want to create. Yes, of course. We're playing chess, not checkers. Assets are queens. Queens give birth to kings, which is cash flow, and cash flow or kings lead pawns, and you sacrifice those pawns to acquire what? More queens. All right. I want a queendom, and I buy income. I want a queendom. Okay. I want something that's fertile, right? I want my subconscious mind to be fertile. I want to tap into the creativity that I have that gives birth to things that then produce offspring in the way that the initial scripture from Deuteronomy 28 reads. All right. So with that, I want to say thank you so much. Remember, be God to yourself, family. Remember that love yourself as God loves you. Be master over yourself in the way that God is master over you. And remember that you are God or first cause in your own life, and no individual, institution, or situation outside of yourself has more power over the future of your life and the trajectory of your life than you do. I will see you tomorrow at 8:30 a.m. Eastern Standard Time, family. Love you. Peace.
I, Jullien Gordon, with this mortgage, relinquish part of my freedom to psych. I've been rent-free since I acquired my first multifamily property, a triplex in Brooklyn, New York, in May of 2013. And since then, I now own 16 multifamily properties with 40 doors that generate about $38,000 per month in rents in just 8 years on the side. Do not sign a 30-year mortgage. Get freedom for life when you buy a multifamily property. Did you know that the word mortgage literally means death pledge? The prefix mort is the same as mortician or mortuary. Listen to me. 44 million households rent, and 82 million single-family buyers think that they own, but they don't. HGTV will say, congrats, you're a homeowner. But that's not true. That's a lie. The moment you get the keys, you're a home buyer. And that is a huge difference. As a home buyer, you're still paying rent. It's not rent to a landlord. It's rent to the bank to use their money. That's called interest. You are borrowing the bank's money. Right? The interest on a $300,000 home at a 4% interest rate will be about $208,000 over 30 years. So that $300,000 house is actually a $508,000 house. What does that mean? That means that you're not only buying yourself a home, you're also buying a home for your banker. If this is you, I can help you get out of this by acquiring a multifamily property. Whether it is rent or a mortgage payment, most American housing expense takes up about 35% of their income. In times like this, when rents are rising, unemployment is rising, and inflation is rising, but wages are staying stagnant, you absolutely need to be rent and mortgage free. Imagine the freedom of never, ever having a housing expense for the rest of your life. If you want financial freedom, starting with your rent and your mortgage, like I did, then click the link below and register for my free webinar coming up on how to finance, find, and finalize multifamily real estate deals. It is actually not as hard as you may think, but keeping up with rising housing costs are. You need to be the receivers of rent, not the payers. Your time is now. Click the link below.